Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, May 12th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES continues to trend higher. Very clear uptrending market still. Higher highs, higher lows still. We continue to see this market build within the range. We had this range right here, 5-day range. We finally got above the previous month's close, and it's been a 3-day narrow range over the last 3 sessions, heading back into or dating back into last Friday. So if you take a look here, boom, boom, down to a 3-day. It's measuring this 3-day range. Right now we have a compression, although the day is not over. We could still see expansion of today's range, which will increase that. But right now, very, very compressed market with an upward bias. What that means is right now we've been compressing, and now we pushed higher a little bit, compressing, and this whole market has been trending up. So the likelihood of more stretching to the upside is very, very high right now. So look for a further squeeze to the upside. If there was a downside break through this zone, it could offer a bear trap that leads to another squeeze higher. Now, one thing to keep in mind, if price does push above these 3-day highs and above the previous month's high, and there's some sort of rejection, that rejection could signal a broader pullback here toward the recent lows of 2750 or the midpoint of this zone here. But overall, right now, the overall expectation is for further upside price action. All right, let's take a look now at the NQ. The NQ continues to hold near the highs of the recent move. The pullback right here has been significant with a great squeeze so far. We're now seeing price hold above the previous month's high price over the last 3 days. Higher highs, higher lows for the last week plus. And right now we're trading inside day narrow range heading into the day's RTH session. So we still have more expansion to come, likely to the upside. I would say keep an eye on 9100. That was the key level we talked about yesterday. Price got very close to it and turned around and rallied off that zone. As long as 9100 remains intact right now, I mean, this market continues to trend higher until proven otherwise. So any pullback could be a buying opportunity until proven otherwise. All right, let's take a look now at crude oil. Now, crude oil has developed a very narrow 5-6 day range here. You can see it's narrow on a 3-day range on the current 3-day basis. If we bring this up now back to a 5, boom, boom, there it is. You'll see right here, compressed right there. The last time it did that on a 5-day basis was here, and we saw this explosive move. We didn't quite get the top red dot. That's usually the target. So when you have this narrow range right here like this, you go boom, you hit the red dot, and it turns blue, right? The blue suggests an overexpansion against average, and sometimes you get it here first, and when you get it like this, that would next suggest that you're going to get a phase where you get compression. Right now we're in the compression phase, and we've had an upward bias. Here's your rejection. It's a bearish rejection signal. Again, I'm looking at the July contract, and 2609 is that midpoint, and if price pushes through that midpoint, we likely get expansion. And right now we're looking at about 8.2 points of range here that we could see over the next 5 to 7 days as this expansion takes hold. So that's a pretty big amount. And again, similar to some of these others here, if price were to say break down first, boom, but reject, that could lead to a big explosive move in the opposite direction, and the 8 points would then be, say, used off the recent pivot low. You'd then forecast it higher off that low. 22 plus 8 would lead to 30, and that would be your target. So again, that's one way that we would forecast that range whenever the time comes. But right now, compression phase clearly intact. We could use yesterday's range as a basis for expansion above 2675 and below 2475 could lead to expansion ahead for crude oil. Okay, let's take a look lastly at gold futures. This one's up about 1/3%. It continues to trade oddly in the range. Again, I marked these ranges yesterday. This is the quieter range, and the bigger range is out to here. And so we had been trading very nicely inside the range until recently, going flat this month. Normally when you go flat this long is just about the time where you see a test of one of the edges. If we test downward first, it could be a great buy to reject these lows and reject the zone for a return back up. If we test up first, keep an eye on how prices react here above 1760, because any rejection or failure to hold that level could bring prices right back down into the range. So right now, until proven otherwise, we're stuck in the range. It's very clear that the market continues to see bulls defend the previous month's close price here and here the last 2 days. It was a bear trap below it, and then a defense here the last 2 days before that. So again, that's the level to watch. And if price can start getting above 1715 or so, that starts to open up the upper end of the range around 1740. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.